Hi, Rick Harter here from Harter-Mortgage. Welcome to this informational video to explain briefly the 2-1 buy-down program. Now, I'm going to just cover the 2-1 buy-down program on this particular message, but there are different buy-down programs. There's a 3-2-1 buy-down, a 2-1 buy-down, and a 1-0 buy-down. So if you want more information, feel free to reach out. Okay, so in a nutshell, what the 2-1 buy-down program does is it essentially is intended to help buyers as well as sellers be more come together when it comes to purchasing and selling a home. So the example that I'm using here is a $750,000 home, a $50K down payment, and a $700,000 loan amount, and again using a market rate of about 7.625. So typically the qualifying principal and interest payment on that loan would be $49.54. But through a negotiated seller credit, meaning that the seller is going to pay for a lower rate and payment in the first 2 years that the buyer owns that home. So in the first year, that buyer's home, the rate and payment would be based on a rate of 5.625, giving them a monthly savings of $925 and again, savings of over $11,000 in the first year. Second year, that rate would go to 6.625, payment $44.82, about $472 a month savings. And again, that buyer savings on year two would be about $56.68. And then starting with year three, it would revert back to the note rate of 7.625. Now again, based on historical market reaction to Fed hikes, more than likely that buyer would have an opportunity to refinance before the end of that 2 years. So that total buyer's payment savings is about $16,768, and that essentially is paid for by the seller. So in this scenario, we would say that, hey, the buyer savings equals the seller cost, written up as a seller credit. So total cost for the buy down, $16,768. We'd probably look to negotiate some that rate discount fee right now, which is running about 0.5% to 1%. So a total seller credit of $19,393 would cover both the buy down and part, if not all, of the rate discount for that buyer. So a clean, easy way to do it would just be to negotiate a $20,000 seller credit. Now what's amazing about this is to achieve the same monthly payment affordability for the buyer strictly through purchase price or price reductions, the seller would have to reduce the purchase price over $150,000 to provide the same first year payment savings versus using the 2-1 buy down. I think most sellers would rather kick in $20,000 rather than give up $150,000 to attract that buyer. So anyway, that's the program in a nutshell. It is eligible. Again, it is a seller-funded program only. Conventional FHA and VA, fixed rate, purchase transactions only, primary residence only, for single unit, PUD, detached and attached and warrantable condominiums only, and loan amounts up to the agency limits. Credit scores do need to be at least 620. Okay, well, if I can offer any additional information on this program, here's my contact information. There's my phone number, there's my email address, or you can certainly Google me or find me here off of this presentation as well. I'm Rick Harter. I am your Mountains to Sound mortgage guide, and call me. Let's talk about the buy down.